All right, guys. So last time we talked about banking, right? Checking and savings. Most of us understand those core concepts. We use checking and savings all the time. But we talked about the gold standard, how we left the gold standard. We have fiat currency now and what that actually is. We talked about banks, where they even came from, how they started with the Knights Templar. And this time we're going to be talking about investments. Okay. So the first investment company ever was the Dutch East India Trading Company. This is the company that branded the P on Captain Jack Sparrow's wrist. It is a real company. You can Google it. It did exist. It was an actual thing. Okay. I don't know why I got this, but I thought it would be cool. But it's super stiff and really big, and it doesn't do any sort of magic at all. So that's the first investment company ever on record. Now, in the past, investments would look like this, right? Either a caravan or a convoy or a ship trading route. They would have an investor, and these investors would come in and say, hey, yeah, we're going to fund your trip to go sell whatever goods you have to sell in the Indies or with the Americas eventually, or with the Silk Road when that opened up, Marco Polo. When the Silk Road opened up, they went and traded silk with China, all that kind of stuff. An investor would fund those trips with the expectation that whatever profits were made, they would share in those profits, which would pay them back for the money invested, and also have a little bit more on top of that as a way to increase their wealth. These days, most of us are going to invest our money into a stock or a bond or an ETF or a mutual fund. If you talk to a financial advisor, they will most likely push you towards a mutual fund. Not for necessarily a bad reason. Financial advisors are paid to do that, so they're just doing their job. You will also invest in cryptocurrency, whether that's a meme coin or a stable coin or an altcoin. All these different things. It's just different ways to say, hey, you can buy low, eventually sell high. I don't think I've heard of any cryptocurrency that pays income yet. You can stake your cryptocurrency. We'll talk about that later. But when you stake your cryptocurrency, you get paid typically in the form of more coins of that cryptocurrency. So you can't kind of get an income as well. You can also mine. We're getting lost in the weeds here. But basically with an investment, you're investing money so you get money back on the back end. And I've talked about this a little bit already, but I'm going to talk about it a little bit more at length here. So in the market, you have two ways to make money in the stock market. You have income, and then you have gains, okay? Most of us, whenever you talk to a trade bro who's like, oh yeah, bro, I bought it at 324 and I sold at 24.50. I made 500% return or whatever. They're possibly most likely talking about day trading, and that's speculative gambling is what that is. Most of us are going to know about crypto. I'm sorry, not crypto. I'm going to know about capital gains because this is something that you buy and you hold for a period of time, and then eventually you sell for a profit. There are some different things that go into that, right? So when it comes to capital gains, you have a couple things impacting the growth. The interesting thing about investing is that literally anything can affect the stock price. The CEO of a company gets caught having an affair, that can tank a stock price of a company. Insider trading, that has an impact. This product that they were making doesn't work like they advertised it, like they wanted it to. That's going to have an impact on the stock price as well. Stock price is linked to sales and profits when it comes to the actual product the company sells, but it's also impacted by the news. It's kind of like your reputation. Your reputation can impact your stock price. And then there's different times that people buy and sell. People will buy low initially at the first IPO. That stands for initial public offering. It's the first time the stock is offered to the general public. Okay, so people will buy at the IPO and then they will hope to sell whenever it goes up. A great example of that would be the Snapchat stock. When Snapchat came out and had a huge IPO, everyone was like, "Oh my God, social media is going to come out. It's going to have, it's going to have a stock available, an IPO, public ticker symbol. It's ticker symbol listed for people to buy and sell in the market." Snapchat released, people bought it jumped up, people sold it, capitalized on their gains immediately. It was like very fast, and it dropped, and it's been pretty low ever since. It's kind of like another term people use for that, especially when it comes to cryptocurrencies, is a rug pull. Okay, people pull the rug out from under you. So that's kind of what happens or can happen with stocks. But typically, somebody will buy a stock and they'll want to hold it for a period of time. And there's a benefit to that, right? And it depends on what your investment strategy is. If your investment strategy is, I want to get in and I want to get out, I want to make money anytime I can, well, you're more likely closer to be considered a day trader, okay? However, a day trader is typically somebody who does more than a certain number of transactions in one day, which is why they're called a day trader. Some people hold it for a few months, a few weeks, as long as if it's under 365 days, that's the actual cutoff limit. If you hold a stock for under 365 days, according to the IRS and the SEC, you are trading for the purposes of generating income in a given year. Okay? Does not mean you're a day trader. A day trader does trade for income, but even if you hold it for 364 days and sell it, you are still trading for the purposes of generating income. The reason that's important to know is if you hold a stock for 365 days or less, any money you make from the stock sale will be counted as income for the year that you are selling it in. And as such, it will be taxed at your regular income bracket. But the government is very big on people investing in companies, especially, and investing for the long term. So if you hold your stock for more than 1 year, doesn't matter if you bought it January 1st, if you held it through January 1st, great. If you bought it on May 25th and you hold it till May 26th, great. You just have to hold the stock for more than an actual year from the day you purchased the stock. If you do that, now if you sell the stock, you are capped at a 15% tax bracket, 15% tax bracket when you sell that stock. And that is again because in the United States, you are rewarded for investing in a company and holding it long term to increase company profits. So there is that, and there is a way to, again, it's all strategies with how do you invest. Some wealthy people that I know have bought stocks and sold stocks so they could have a lower income bracket after a year. But then I know other people who have bought and they have sold stocks for a loss so they can capitalize on a loss for the year. So that way they can claim the loss on their taxes, which is another thing entirely. Because yes, you can report your loss when it comes to stocks, buying and selling. You can report your stocks as an income loss. And the government recognizes that you lost money from income or from stocks. And you get to take that off of your income and you get a little bit of a tax break. Very small amount. You're limited to $3,000 each year. But you can take off some money from your income taxes based on you losing money when you sell stock. Okay, so capital gains. You buy low, you sell high. We kind of got lost in the weeds there a little bit, but it's all important information. Now, income. Income is when you buy a stock and you hold it for the long term because you are just trying to raise your income every month, okay? I say every month because I invest for monthly income. But you can have income monthly, quarterly, semi-annually, or annually. Most stocks, ETFs, not mutual funds, most stocks and ETFs that I've seen will pay at least quarterly dividends, especially if you are investing in dividend stocks and ETFs. A lot of them pay once a year. The ones that I invest in heavily pay once a month. And there's different strategies for these. But you invest in these things that are going to pay you on a specific time schedule. And the reason that that's so much different than the capital gains is this. With income, let me step back. We all know the story of the golden goose, right? Person had a goose that laid a golden egg every day. And at one point they're like, you know what? I'm going to kill the golden goose. I'm going to get all the gold out of the goose. They killed the goose. There was no gold inside, and they have now killed their golden goose, okay? Most investments that people talk to you about you're going to have to kill the golden goose in order for you to get that money, okay? You're going to have to buy a stock, hold it for a certain period of time, and then when it goes up a certain amount, you got to sell it, which is for you killing the golden goose because you no longer have the asset, and you get the money that you get from selling the stock. And now you have your cash, okay? And then you have income. Income, I would say, is more along the lines of you have the golden goose and you just feed it every day. Sometimes that golden goose is going to have a bad day. Sometimes it's going to have a great day, right? And that will look like in the stock market, that will look like you get what's called a dividend, which is where the company pays you every month or every quarter, every 6 months or every year. Or sometimes they'll do something called a special dividend. Well, they'll give out a dividend on top of the dividend they're already paying. You have to do your research and figure out which stock you want to buy that does this, or you can always Google it. The information is all out there. Nothing I'm saying is investment advice, and I'm not telling you what stock to pick. I'm saying you can Google this and the information is out there because companies have to disclose their dividends. They are required by law that you must, and regulations, you must disclose your dividends to your shareholders and to the general public. So income, you are buying the golden goose, you're feeding it every day. For me, for example, I'm investing a certain amount of money into my golden goose every single day, even on the weekends, okay? And just to kind of clarify that, most stocks cannot be traded on the weekend. However, you can have it to where every weekend, the money that would have gone into them had it been a regular trading day is saved up. And then on Monday, it's purchased. So just an extra 2 days is bought on Monday. Well, technically 3 days because Saturday, Sunday, and then Monday. So that's what I do because I want to feed the golden goose. I want to get to the point where I don't have to work. I don't have to do anything I don't want to do. I get to act full time. I get to focus on producing great stories, telling just badass stories, making great art, making music. That's what I want to focus on. So to get there, I have to focus on my income first. And you do too. The point of all of this is, at some point, I want to have a whole army of artists who are so financially independent from their income that they just make art all the time. You don't have to worry about your bills. Your bills are taken care of from your passive income that comes from your investments. All you got to do is check on it every once in a while. Make sure it's doing what it's supposed to do. Okay? As opposed to, with stocks that are growth, you have to check on them all the time. Is it crashing? Do I sell now? Do I buy more now? There's a lot of anxiety there, which is why I don't love growth. I do invest in growth too, but not as heavily as I do in income, because I don't like the anxiety that comes from, I already have so much stress in my life. I don't need more anxiety about, is my money, which was worth this, now worth this, And there are ways to counteract that. You have something called dollar cost averaging. We'll talk about that in the future as well. But there's a lot of anxiety that goes into that. So I want to raise an army of people who are so financially secure. I'm not going to say financially independent, because I would love for us all to be financially independent, but to get to that, it looks different for everyone. I want to get you all to a point where you understand, okay, I can invest in these things. I can check on my investments have whatever period you set for yourself, and make sure that I'm going to get paid this much on this month or this quarter, or this is going to take care of me here and there. And that's going to make sure that I'm able to pay my bills so I can focus 100% on my art. In the Last Samurai, they talk about in that movie how every person in the village that Tom Cruise went to, whatever it was their job, they so dedicated their life to it that it was an art. Tea making, swordsmithing, archery, like all of it was, they were able to devote 100% of their time to their craft and make it into an actual art form. I would love to make actors so free to do that, to where all you focus on is acting. Because it sucks, yes, first it sucks, you gotta embrace the suck, you gotta do the part you don't wanna do, which is working those long hours, getting that money, putting that money aside, investing in your own income, okay? And then getting to the point where you're like, okay, my income's got me covered, watch me be an artist now. And then you just hit it hard, and you just show the world what you can do, and the stories you'll tell, and the people you'll impact. That's what I want to do. So that's the point of all of this, right? Banking, Templar, dollar cost averaging, cryptocurrencies, all this stuff. The point of it all is I want to help you guys live your dream, and we're going to talk about that even more. But for today, the thing for today was, what is investing, right? What it is, how it actually works, how you make money from it, how it started, and there we go. So anyways, I'll catch you guys on the next time. Let me know if you have any questions or comments below. Shoot me a DM, shoot me a message. Happy to help all of you guys anytime I can, and we'll talk soon.